Let's also find out what the business outlook is, what the volume and margin guidance is when it comes to TVS supply chain, recently listed. Ravi Viswanathan then is the managing director, and Ravi Prakash Bhagavatula is the CFO. Thank you so much for taking time out, gentlemen, and joining in. I'm going to come to you first then, Mr. Viswanathan, to talk a little bit about your revenue growth, because that was witnessed in the integrated supply chain segment. The network solutions segment, though, saw a decline. So when is it that you're seeing a recovery? And if you could walk us through the outlook on both the segments.
Thank you and good morning to you. So if you look at the integrated supply chain solutions, we had a spectacular growth of 20.2% year on year. And what was very satisfying was the fact that it was a secular growth. We grew 14.3% in India and about 25% in the rest of the world, with very strong wins coming in from, we had already announced Centrica, which is a very large utility company in the UK, signing a 7-year deal. So on the back of some very large contracts. And overall, as a company, our business development delivered almost 255 crores of fresh revenue. So we're very happy about the overall growth. If you look at the network segment, I would say that it is more a question of the macro. We are seeing a significantly weak macro. And for us, the positives there is that we're seeing continuous momentum in the new deals. We are establishing very strong renewals. And we are staying very close to our customers, and our deal conversion ratios are looking good. And as the macro picks up, we believe that the company is well poised to grow along with our customers. So we are extremely satisfied where we are on Q1. ISCS has been a standout quarter, and the network solutions is in line with the macro.
Ravi, if I could stay with you, just an extension to what you just said. The global freight rates are subdued, which did impact your freight revenue as well. When do you actually see a reversal in freight rates, and what's the export outlook?
Two points to that question. One is, look, the global freight rates have kind of got back to where it was pre-COVID. So I think it is probably the right thing to expect the freight rates to be in a very low swing from where we are today. But I think the key here is the volume growth. What we are seeing across the globe, and India is no exception, is the fact that the export has come down significantly in all of the countries, and therefore the trade lanes that we operate in, we are seeing much less uptake in the volumes. And this is a macro. Even if you look at the India numbers, the India economic figures show close to a 15% decline in exports in Q1. And we are hoping that that volume will pick up as we are seeing the recessionary trends fading away in some parts of the Western Hemisphere. So I would say it is not a 1 quarter thing, but we are really looking at maybe 2 to 3 quarters when we see the volumes coming back to some level of normalcy. But the key for us is the fact that if you look at the network solution segment, our operational efficiency, which Ravi Prakash can talk about, and our procurement efficiency have delivered much better gross margins, which means that in spite of the decline in revenue, we've been able to manage the EBITDA. And that's the reason why the company's EBITDA grew by 7.3% year on year and 3.3% on a quarter basis.
Ravi Prakash, come in there because, like Ravi was saying, your margins have improved in this quarter on the back of the shift towards high margin ISCS segment, right? Yes. Tell me, what's going to be the contribution and the share from ISCS, say, by FY25? And what is the margin trajectory that you hope to conquer?
The ISCS segment generally has about 100 to 120 basis point margin advantage versus the network segment. It has moved to almost 56% of our total mix in this quarter. We expect it to be above 50 or around 50 as we keep going forward. And the margin will continue to stay or go higher than what you've seen in Q1. In a way, we actually hit our target margins a little bit earlier than what we had expected because of the spectacular performance in Q1. Going forward, ISCS in the next couple of years, we expect it to be upwards of 50% and margins to be a little bit better than what we have right now.
All right. And can you tell us a little bit more about the new customer additions in the quarter? What is the new addition likely to do for your overall revenues? Are there any more of these engagements that are there in the pipeline?
Sure. I mean, I've already elaborated on the Centrica. It is a 7-year, 2,000 plus crore engagement that we signed, early this year, and it's already in play, which means that we're seeing the revenue flow from this customer. We signed quite a few large deals with a large glass material company here in India, with a large solar energy technology company here in India, a large beverage company in the UK. We signed with a large German MNC mobility company in the US. We are seeing a lot of renewals and encirclement opportunities, which is, if I look at it, looking forward as we go forward, we are clearly seeing the pipeline getting stronger. We are seeing very, very healthy pipeline in the integrated supply chain solutions, and therefore we remain very confident that the ISCS business will continue to grow. And like I said, the network solutions segment, if I were to elaborate, there are two parts to it. One is the integrated final mile, the other is the global forwarding business. The integrated final mile business will start showing growth from the second half of the year. And that's why we say that, is because a lot of the cost has a lag factor in terms of getting transmitted to the customer. So inflation costs, price increases are due in H2, which will show up in the network solution segment. So we believe that those are the opportunities that we are going after. The pipeline is continuing to be very, very strong. Deal pipeline looks very, very strong.
Okay, that's encouraging. And what about margins? Because they've been in the range of about 6 to 7%. Do you think that looks sustainable? Can you give us some sort of a sense as to what the margins could be for FY24, your guidance?
We expect to end FY24 with about between a 50 to 100 basis point improvement over the prior year. And the reason for that, there are two reasons for that. One is we see continued strength in supply chain business, and the mix in FY24 is going to be probably more than what we had expected from supply chain. So that is a positive mix impact. The second impact is we are taking very strong procurement, operational efficiency, and cost management measures in Q1 and Q2, which we expect to see bear fruit in Q3 and Q4. And that would especially come to bear on the network segment. Therefore, in H2, we expect to see supply chain continue where it is right now, and then hopefully a little more positive contribution from the network segment margins, adding to a full year margin, which should be about 100 basis points better than what we did last year.
And given that your growth over the last few years has been on the back of acquisitions, just curious, are there any more in the pipeline?
Let me just qualify that. If you look at our acquisition history, our last large acquisition happened in 2018-19. We made a small tuck-in acquisition in between, which was about 170 crore acquisition in India. Our strategy is focused a lot on organic growth, and that can be seen from our customer pipeline, customer deals, customer acquisitions, and the fact that we are growing our top customers, revenue coming in from the top customers. That will be the core focus of the company. Our strategy is going to be about customers, accounts, key accounts, encirclement, and selling more capability to the same customers. It doesn't mean that we will not look at acquisition, but acquisitions is I would say, something which we keep an eye on. But our strategy is focused on organic growth.
In fact, if I might add there, in the last 3-4 years, between 20 and 23, we've added almost 3,600 crores of revenue. Almost bulk of it is organic growth. And that's what we are actually looking to do in the future also. That's the reason we've called out the strength of the business development, 255 crores in Q1. We expect to continue that kind of momentum. And going forward as well, the primary focus of the company is organic growth.
Appreciate your time. Thanks much for taking time out and joining in and giving us a view on how business is shaping up. Tell you what, we'll slip into a very short break right here on the show. Stay with us for lots more.